Namaste, welcome to Arthaniti, where we discuss money and money matters to help you in your investing decisions. Well, times are uncertain. Market is on a roller coaster ride, seeing new lows and recovering after that. What is the best investment strategy in this scenario? Trump's era is about to start in 10 days, and no one knows what his policies are going to be. One day, he aspires to take back the Panama Canal, Greenland, and make Canada the 51st state of the United States. Now, what is actually going to happen? Only time will tell. How is the dollar going to behave in the current scenario? What is the impact of Trump's policies on global trade? All these things will have an impact not only on the Indian stock markets but markets across the globe. Right? Times are uncertain, and that is what we are seeing in the markets today. They have been jittery for quite some time now. So, in this scenario, what is the outlook for 2025 and what should be your right investment strategy? Well, we make these videos to help you make those right investments, correct? So, today I want to talk about a diversification strategy which is going to help you weather these storms. I'm talking about ICICI Prudential Multi-Asset Fund. Now, in one of the HNI meetings of ICICI Bank, its fund manager S. Naren has said that 2024 was exuberant, but 2025 is going to be cautious in the short term. Although the long term perspective is good, why? Because Indian economy is in good shape. In the short term, there is bound to be volatility, and what he suggests that in such scenarios, the best investment to do is a hybrid fund. That is why I chose today's topic of the video to be ICICI Prudential Multi-Asset Fund. It is a hybrid fund with more than 2 decades in the market and proven performance, which may be a right strategy for you in such times. So let us start. To start with, let us have an overlook of this fund. Now, ICICI Multi-Asset Fund was launched on 31st October 2022. So, it has a good 22 years of proven track record. It is one of the largest multi-asset allocation funds in the country. It boasts of a huge AUM, assets under management, of nearly 50,495 crore rupees as of December 2024. Now, this is almost 50% of the market share in this particular category of funds, which is huge, right? Now, the primary objective of the fund is capital appreciation by investing in various different asset classes like equities, debt, then commodities like gold and silver, REITs, that is real estate investment trusts, and infrastructural investment trusts as well. So it invests in a basket of securities so that your risk is diversified and you get good returns. What has been the performance of this fund? Well, in the last 1 year it has generated a return of 18.8%, which is very good, right? In the other 3 year CAGR stands at 19.4%. 5 year CAGR stands at 21.2%. Since inception, its CAGR for the last 22 years has been 21.58%. So, which is a very good return for that period. In effect, if you had invested 10 lakh rupees at the time of inception, after 22 years, it would have grown to a humongous 7.26 crore rupees. So, all in all, the performance of this fund has been really good. What are the benchmarks for this fund? Well, they are Nifty 200 TRI, where TRI is the total return index, plus Nifty Composite Debt Index and ICOMDEX Composite Index. Now, this fund has consistently outperformed these benchmarks with superior risk adjusted returns. Let us look at the investment portfolio of this fund. Well, the fund predominantly invests in equities. Of the total portfolio, nearly 65 to 70% is invested in large cap funds like HDFC Bank, ICICI Bank, Reliance, NTPC, to name a few. 15% is allocated to debts. like government securities or AAA rated instruments. 10% is allocated to commodities like gold and silver, and the remaining is invested in real estate or infrastructure investment trusts derivatives for diversification. The diversification investing strategy helps to stabilize the returns during market downturns and take advantage of growth opportunities across different asset classes. One more important aspect while deciding on a mutual fund is to know in detail about the management team, the people who run the show. Well, in this case, it is managed by expert professionals helmed by Sankaran Naren. Now, he is a seasoned asset manager who is known for his contrarian investment philosophy. The expertise of the management team has helped ICICI Prudential navigate through different market conditions and consistently generate returns above benchmarks for many years now. Let us look at the expense ratio and the risk for this fund. Now, this fund boasts of a competitive expense ratio of 0.69% compared to the category average of 1.54%. So, the expense ratio for this fund is a good 1% below its category average. But when it comes to risk, the standard deviation of this fund stands at 7.64 when you compare it with its peers like SBI Multi Asset Allocation Fund. What this means is the returns for this fund tend to be more volatile. Risk is higher, but there are higher chances of earning better returns as well. When we compare Sharp ratio, it's for this fund, it stands at 1.64%. Now, what this means is this fund is able to deliver risk adjusted returns, better risk adjusted returns. What is the taxation for this fund? Well, since the equity holding in for this fund stands at 66.65%, which is above the 65% threshold, the fund is subject to long term capital gains tax, where holding period is more than 12 months, at a tax rate of 12.5% on gains that you get exceeding 1,25,000 rupees in a financial year. As far as short term capital gains tax is concerned, where holding is less than 12 months, tax rate of 20% is applicable. Now, these tax rates are applicable for redemptions made on and after 23rd July 2024, as per the changes in the Union Budget 2024. Right, you have to take note of this. And a few more important points to consider when it comes to taxation are that there are no indexation benefits available for this fund. Surcharge and cess are over and above the tax rates that I have mentioned. Dividends from these funds are charged in the hands of the investors at their applicable tax rates. Right now, tax laws are subject to change. We are going to have a new budget on 1st of February 2025. So it is always advisable that you remain up to date when the knowledge about taxation is concerned, and take advice of your tax consultant when about taxation. Why is this fund suitable in the current market scenario? Well, because of heightened economic uncertainties and geopolitical tensions, this fund is your best bet. Why? Because of its diversification strategy. It does not depend on any one asset class, and the returns are not subject to the volatility of any one asset class. The returns are spread over different asset classes, reducing the risk and helping us get better returns. Secondly, its exposure to commodities like gold and silver help us navigate inflationary times, correct? And thirdly, dynamic asset allocation strategy that this fund follows gives it the agility, swiftness to change between asset classes depending on the market conditions. So quickly it can change its strategy if markets are not heading in the right direction. Let us now look at the closest peers of this fund in this category. Now, Quant Mutual Fund, which has given returns of nearly 26% in the last 1 year, which has an AUM of 3,152 crores. Now, compare this with the 50,000 450 crore AUM of ICICI Multi-Asset Fund, right? Quant has given a return of 26.8%, but it boasts of higher volatility. And recently, Quant is under SEBI scanner for front running scandal as well. So that has to be kept in mind. The second closest competitor to this fund is SBI Asset Allocation Fund, where the risk is comparatively lower. It has a AUM of 6,835 crores and has given returns of 13.75% in the last 1 year. Also, UTI Multi Asset Allocation Fund is also a strong performer in this category with balanced risk and return matrix. Uh, it has given returns of nearly 21.35% in the last 1 year. To summarize, globally, multi asset allocation funds have been a hit with investors. Why? Because of their agility, swiftness to navigate between different asset classes and take advantage of growth potential across asset classes. So, they are not marred by low returns. In a particular asset class, right? So if you have a long term investment outlook with a moderate to high risk taking capacity, and you want to diversify your investment across different asset classes, and you want to invest for a period of no less than 3 to 5 years, yes, this kind of fund is ideal investment vehicle for you. So, if you are a seasoned investor or even if you are a new investor, this fund is an ideal investment opportunity. Why? Because it helps you invest across asset classes, reducing your risk and increasing your chances of bettering your returns. Correct? Investing wisely is always the good thing to do because your future financial goals are dependent on it. Seek advice from professionals, ask experts, and align your investments with your financial goals. That is the way to achieve financial freedom. If you have liked this video, please like, share, and subscribe to my channel for more such informational videos about investing. Until next time, stay safe. Goodbye.